Hello, it's Cynthia Fick, and this is your Tuesday stock market update. It's been a couple of weeks since I've spoken with you, and a lot has happened since then. We had what I thought looked like a nice touchback happening in the market. We had gone pretty far, pretty fast. We were touching back to some moving averages. And then we had the Silicon Valley Bank issue come up, and it looked like a hot knife sliced through butter. And so that kind of changed some things for me and what was going on in the stock market. Just made me want to pull back and wait a little bit longer on even thinking about putting any of our cash back into the market. So that's kind of what's been happening. And what I will say, let's kind of look back at the effects of some of these things on both the stock and the bond market. First off, with the Federal Reserve has been raising rates too aggressively, and that's what kind of got the banks in this situation. And so it looks like to me that now the banks are going to start to kind of constrict because they're being looked at a little closer. And so they're not going to be as willing to lend out as they have been in the past. And that may end up finishing off the job that the Federal Reserve was trying to do in the first place. So they're going to try to tighten things even more. And so that does kind of signal that the general long-term outlook, I would imagine, over the long run, for the stock market and the bond market. For the bond market, it will be that interest rates are probably at some point going to stabilize and maybe even go a little lower, which means rates are all over the place right now. This could be, if we haven't done so already, it could be a good time to lock in some higher yielding, even short-term to medium-term bonds in the near future. As far as what it means for the stock market, let me show you this. I'm just going to go straight to the charts as I usually do. I'm going to compare it to a couple of times in the market where we had a similar kind of drawdown, kind of long-term bear market, and we started to recover and looking at what's happening there. So this is today, and this is what our market looks like right now. Okay, this is something called a momentum figure that's really important because it just kind of signals what happens in the stock market. And here is a similar time in the market in 2002 when we had a downturn. We started to go back up, and then it failed and went down even lower. Okay, and this is what happened to our momentum at that time. It failed. The momentum figure failed as it got to the 0 point. Okay, very important to notice. Just remember that. Here we have in 2008, and we'd had a downturn. Market started going up. And then, of course, we all remember this, where the market just kept going down. So again, it failed. The momentum figure failed below 0 at that point. So in 2016, it did a W pattern, which was, very successful there. And we fast forward to 2022, 23, just last week, we went over the 0 over on the momentum. That is one bit of positivity I see in the stock market right now. Not sure what the long-term effects of that are going to be, because it's just way too soon to make any decisions on what's going on in the stock market, especially about putting cash back into the market, which is what we've been waiting on all through 2022 and even into 2023. So time is going to tell. We're going to trade the chart right in front of us. I'm not going to project. I'm going to keep an open mind, trading exactly what I'm seeing. And it has kept us out of the market 2022, so far in 2023, with any new cash. And so that's where we're at right now as far as what's happening with bonds. Bond yields are going down, but I think the long-term trend there is that they may continue to stabilize here. I don't think the Federal Reserve is going to have to raise interest rates too much more, because the bonds, the banks slowing down their lending is going to constrict the economy also. So that means if they're not going to be having to raise interest rates, they're going to have to be worrying about not sending us into a recession because we constrict too much. And so guess what they may have to do is at some point later in the year, they may have to start lowering interest rates. So that is a view of today and what I think is going on in both the stock and the bond market. And I look forward to talking to you next Tuesday. Have a great week. Bye.